The situation continues to unfold. The first thing I want to talk about is Evergrande HALT. The stock has been halted. I've got brand new information that has come out. You need to know what's going on. The second thing I want to talk about is permanent inflation. You've been hearing temporary and transitory, but I'm going to show you how this is permanent. The third thing I want to talk about is getting messy. There's so much happening today, and I will bring that and clarify it for you. And if we have time, if you stay until the end, I am going to give you one tip related to self-sufficiency. Let's go. All right, first things first, share trading suspended as debt test looms. Evergrande update. Evergrande property unit shares halted in Hong Kong. I'll show you the chart in just a second, but take a look at this. Shares in China Evergrande and its property management unit were suspended from trading on Monday as a fresh debt test looms for the developer, underscoring the broader risks that have left the credit markets on edge. You also have this. Hobson Development Holdings, whose shares are also suspended on Monday, plans to acquire a 51% stake in Evergrande. That's worth $5 billion. Is this part of a forced, shared prosperity, and the term that they love to use, how this is kind of everybody gets to win and everybody doesn't get to get ahead of the other. One company, you're going to have to buy this bad company, this one that's sinking to the ground. Yeah, you've got to buy some of it. You now have to take ownership of it. This is big. Now, this could potentially push the price of the stock up, assuming that the government is kind of taking control over the situation. All right. They're just talking about the $300 billion in liabilities, but it goes beyond that. We'll talk about more of that in the Money GPS Insights. Okay, so if you want to check it out, a lot more in this article and another I'll show you that contains some of that same information, key developments here. I find it a little unusual, to say the least, but we'll see what happens. As I said, I'm going to bring you the information as it comes out. All right, looking at this, you could see the stock for yourself. It has come off the bottom. So it fell down to, let's say, about 225 or so. It is now at 295. We will see what happens as the stock starts moving. It looks like, that would be beneficial to the stock, at least in the short term, but nobody really knows what's going on with this because it's really a very, very closed system. Now, I'm looking at the market itself, the broader market, the Hang Seng Index, it dropped 2% as a result of this. The HALT spooks the investors, and of course, you see what happens. But if they get reassured, this can certainly come up. Now, quick refresher about Evergrande. Evergrande Empire comprises 1,300 housing projects in nearly 300 cities, a football team, an island holiday resort with 58 hotels, and 15 Chinese Disneyland-like theme parks now under construction in an eye-popping candy and neon color palette. All right. This is with $300 billion of other people's money. It wasn't a problem late last year, but China changed the rules and now suddenly they can't pay their debts. All right. They do give you a lot of detail historically, comparing other bubbles that we've seen and so on. No time for that today, but as always, links will be in the description. Evergrande shares have plunged 80% this year. Bonds have tumbled. And you could see what has happened as the contagion effects start to take hold. Right now, it's within China's markets and ultimately within the property sector, but that can spill over. We don't know. We don't know a lot of those details. I think it's important to stress that, okay? We don't know what's happening yet. China steps up efforts to ring-fence Evergrande, not save it. Beijing nudges banks to ease credit and support real estate firms. So if you look back in April, I was talking about the China Credit Impulse. And this is essentially the amount of money that's being lent out, okay, by the banks. And this right here just gives you this idea of where things are moving to, and then that affects the rest of the world several months down the road. So this now could be changing. It was negative back in that April timeframe. And now this could be going in a positive, like it may have bottomed out and we may be heading up from here, at least as it relates to the amount of money being loaned out. We'll see what happens. I will give you the data as soon as I have that, okay? Moves show China will put homebuyers ahead of bond creditors. We'll see. Who knows? All of this, of course, is speculation. They're talking more about it. I don't want to get too much into the detail. I don't like to look at things that haven't happened yet, but I do like to let you know of what's happening in general. The first obligation is going to make sure that homeowners who bought those homes take delivery and are made whole at the very end of the pecking order on the offshore bondholders. And right now, there's that 30-day grace period. Are they going to be paying up on the debt that they have yet to pay? So you could see here more of those details. But this is just Goldman Sachs saying we revised down our growth forecasts for China. Remember, slowing growth. I talked about the retail sales slowing down. I talked about this in general. And if there is not necessarily a recession, a full-blown recession that happens, but significantly slower growth, this could actually slow down everything in a sense, actually in a good way, perhaps, because the markets right now are so hot, the economy is so hot, everything is going so hot, and it needs to kind of cool down in order for the supply chain to keep on chugging along. So I think that this is something that people need to understand. The numbers themselves, they're all contrived, and quite frankly, the forecasts are never accurate. But the point is, they're foreseeing a slowdown. We'll see what happens. Let's discuss more about this in the GPS Insights. Evergrande has 40 to 50% off balance sheet debt. So in addition to what the mainstream media is willing to talk to you about, you've got a massive amount sitting there off balance sheet. Always remember that financial contagion and the shadow banking monster lurk behind all of this, not necessarily with Evergrande, but in general. And that's why whatever you're going to see at face value, don't take it. Investors must prepare for the spillover effects just in case. Right now, there's a lot of risk taking and there's a lot of concerns, so just be careful. I know you've been dealing with inflation no matter where you are around the world. Check this out. The US may be headed for an era in which inflation remains significantly higher on average over the next decade. That really isn't something we have heard too often, but now it's becoming kind of a known thing. Okay, look at this. The prospect of persistently higher inflation worldwide is gaining traction after the heads of the Fed, ECB, Bank of England, Bank of Japan, all of them acknowledged that the spike in price gains seen in many advanced countries this year may stay elevated for some time. They're all admitting to it now. Why? Because we got past the point at which they said it would have already gone down. This has happened. Nobody wants to talk about the fact that they're all printing money more than ever before. Underlying all of this is a devalued currency, no matter which one we're looking at, whether that is the US dollar or the Federal Reserve note, as it really should be called, the ECB. You know that the euro is getting devalued as well. But what they talk about in here, I believe this is the one, essentially saying that inflation may not necessarily pick up, the official inflation numbers may not necessarily pick up in Europe, in Japan, so they may fare better in some cases than other places where inflation is already running hot, particularly in developed nations. All right, very important. And we've got problems all along that are adding to the inflation and adding to ultimately the prices you pay. Okay, cargo waiting at LA Long Beach, big time. The amount of containers is just something that we've never seen before. It continues to go higher and higher and higher. The cargo ships offshore are just, it's unbelievable. I have shown you, I believe on the live video, I showed people, I had multiple individuals send me pictures of this area, confirming what I've seen in the news already. So it's excellent to get that and crowdsource the information. It's just getting more serious every single day, it seems. So that's about it. Now, what I wanted to ask you here is if you would do what Chuck Norris would do, because everyone would do what Chuck Norris would do, hit that like button. I do appreciate it very much. All right, look at this. This comes from John Kemp out of Reuters. And my goodness, I mean, I've shown you this data before. I hope you can see this. You're looking at gas futures, Dutch gas futures specifically, going straight up. Straight up. So just to give you an idea, 2011 all the way through to 2019 timeframe, it's around 20, and now around 100. 5 times. So at the level it was at, fluctuating for, almost a decade practically, and then suddenly out of nowhere, 5 times greater. So imagine your electricity or your whatever this might be, in this case gas, you were paying $100. Think about it. You're paying 500, from 100 to 500. Huge difference. Okay, that's going to impact a lot of families. Okay, gas futures. Just looking at this, Netherlands natural gas futures, you can see all the different ways they calculate it. Deliveries for January 2022 going up. Same sort of information, just showing you things have gone crazy. US spot wholesale gas and electricity prices, again, going up. We have never seen anything like this before. Wherever you are, put your information in the comments. Let's talk about this. Let's continue the trend of this discussion. I want to know what's happening where you are. Please let us all know. A German power plant just ran out of coal in the latest energy shock. Can you believe it? A coal index is headed for a record after sky-high trades. Somebody was asking me what I think on the live session as I record this. It was tonight. They were asking me, what do you think about coal? What's happening with coal? Well, take a look at this right now. As always, links are in the description, but it just shows you that this can happen anywhere, but Europe is feeling this big time. Monthly output rose to the highest since 2019 in September. Okay. Big news happening right now. Berliners, speaking of Germany, Berliners are angry about housing, and so is much of Europe. Soaring rents and out of reach prices have fueled property inequality. If you have the time, if you are interested, this one is a long, detailed article, gets into a lot of different things. I mean, there's so many different charts in here. You can just see the soaring housing costs. Look at the European Union. Some of these areas are just off the charts. Others are a little bit more modest, but you can't have real estate going up like this and it's reasonable and people can't keep up. Prices in the Euro area jumped more than 30% in some areas. Rents risen 15% in the same period. Okay. Ownership rates, depending on where you are in Europe, between your owners and tenants, you could see. But Germany, 50%, believe it or not. Okay. 50% are tenants. And, you see that where the prices are, it becomes less affordable. People living at home, you could see this as a trend. What does that tell you? This is something that as time moves on, the house is getting too expensive, property is getting too expensive. They stay at home for longer. They try to save up money, but the prices are escalating higher than what they can afford. And then you look at this. In US, mortgage payments haven't been this unaffordable since 2008. Record growth in home prices is erasing savings typically delivered by low interest rates. It's a mess. It's a disaster on all levels. But what about the stock market? It continues to go higher and higher and higher. This is just showing you from Morgan Stanley, has the uptrend broken as the buy the dip strategy is challenged for the first time? That's right. This is showing you the red line there being the 50-day moving average. Wasn't able to break through that where it sits. We'll see. Okay, we'll see. As they note here, there was big volume. There was actually big volume and still wasn't able to break through that. There's a lot of concern about the debt ceiling, about this and that. Of course, Evergrande being a little bit of a concern at this time as well. Where will this go? We'll have to see. As you watch this video, likely the markets have opened in the US and we'll see where it goes. I think the first day of the week, probably not a good indicator because of so much happening over the weekend, but we'll keep track of that. And then you look at restaurants. I've got some information really quickly. 78%, based on the survey, 78% of operators say that their restaurant experienced a decline in customer demand for indoor on-premises dining in recent weeks because of the conditions happening right now. and they just go up. Food costs are going crazy. Labor costs are higher. Occupancy costs, profitability is down. Okay, big problems going on. There's restrictions. There's all kinds of different things happening. But the restaurant industry again taking another hit. Okay, 51% of restaurants couldn't pay their September rent. This is just unbelievable. Massage therapists, beauty salons, even construction. You go down the list. This is not good. This is not sustainable. Businesses continue to close. And no matter how much money you funnel from the taxpayer to the businesses, it does not resolve the problem. Compounding that, DHL raising rates, UPS, FedEx, same thing. Okay? Now you waited to the end. Please, please, please do something about your energy. Okay? Relying on the power grid leaves you constantly paying more and many interruptions along the way. Whatever you got to do, solar panels, geothermal, backup generator, natural gas, whatever that might be, have some sort of backup. I know times are tough, but it looks like it that in 6 months from now, it might be even worse. Okay, when we're in the middle of the winter even, we're coming at January, February timeframe is real cold. This might get even worse. The prices might be 5 times higher than where they are today. So plan accordingly. All right. Look for the tax rebates in your local area. Maybe you can get these type of things that would help you out, whether it's insulation in your home, whether it is solar panels or whatever that might be. There might be a way to actually get it for a reasonably cheap price. Okay. Look for those rebates in your area, depending on where you are. Check it out. There's more to this, of course, but I just wanted to leave you with that. If you're not already an insider, you can do so by hitting this card up here. You'll get the email 5 days a week. You get that information directly to your inbox, or check it out at themoneygps.com, and simply to support the channel, hit the thumbs up. If you haven't seen this video yet, I would definitely recommend checking it out. Lots of detail, lots of good stuff. Click it and I'll see you there.